Hello, I'm Madani Ariam. This video is about what is an investment. An investment is an asset or item to create income or gain understanding. Understanding is an enhancement in the estimate of an asset over time. It demands the amount of source today, like time, work, and money, for a more significant payment in the future, creating revenue. Where to invest? Stocks or justices? A share of stock is a place of possession of a public or private company. The shareholder may be liable to sharing created from the company's net profit. The stock's worth can also grow and sell for capital increases. The two elementary types of shares to invest in are common and favored. Bonds or fixed income securities, these investments often require an upfront investment and pay a repeated gain over time, called a voucher payment. In experience, the investor gets the capital invested into the bond. Like debt, bond investments are machinery for administrations and companies to increase cash. Index funds or reciprocal funds. Index and mutual funds combine certain investments to make one investment. A shareholder can purchase shares of a single common fund that owns shares of several companies. Mutual funds are aggressively managed, while direct funds are often reflexively managed. This means that the investment experts administering the mutual fund are trying to beat a peculiar yardstick, while index funds attempt to duplicate a yardstick. Real estate. Real estate reserves are investment in physical, actual spaces that can be used. Property can be built on, office buildings can be concerned, storerooms can store goods, and housing properties can house families. Real estate investments may involve buying sites, creating sites for particular uses, or buying ready-to-occupy trading sites. Commodities, raw materials such as farming, momentum, or metals, merchandise. Shareholders can invest in physical commodities like owning a bar of gold, or choose complementary investment products that denote digital possession, such as gold, ETF, oil, and gas are counted products. Cryptocurrency, a blockchain-based currency used to manage or hold digital value. Cryptocurrency ventures can issue coins or tokens that may enhance value. These tokens can be used to implement. Cryptocurrency can be ventured on a blockchain where shareholders agree to lock their tokens on a network to help prove operations. These ventures are paid with more tokens. Collectibles. Assembling or purchasing breakables means buying uncommon items in expectations of those items enhancing in value and claim. From sports possessions to comic books, these bodily items often require substantial keeping, believing that older items usually can greater worth. Cryptocurrency has given rise to dispersed finance, or numerical branch of finance that permits users to loan, control, or use currency. How to invest? Research. Investors need to comprehend the automobiles into which they are putting their money. Investors should do the homework whether it is a single share of a well deep-rooted company or a risky investment industry. Form a specific expenditure plan. Before investing, people should ensure that they have enough capital to pay monthly expenses and already have an emergency fund in place. Comprehend liquidity limits. Some investments are less liquid than others and may not be easy to sell. An asset like certificate of deposit may be barred for a certain period and cannot be quickly discharged. Tax references. Investors should comprehend the cost of short-term and long-term capital gain taxes, tax rates. Decide risk. Asset incurs risk. Shareholders may end up with less money than they started with. Investors who have difficulty with this plan can lower their investment to only what they are comfortable losing, or explore ways to moderate risk through diversification. Take the next step to invest. Advertiser expose, consult an advertiser. Many financial experts advise and help shareholders get financial methods, accounts, and online platforms. Change mixes various funds such as stocks, bonds, or real estate within a collection to lower portfolio risk. Determining return on investment, ROI. The initial way to determine the time of an investment is to determine the return on investment. ROI is assessed as ROI equal to current value of investment minus initial value of investment divided by original value of investment. ROI allows different investments across different manufacturing to be contrasted. For example, think two assets. A $1,000 asset in stock that raised to $1,100 during the last year, or a $150,000 asset in real estate now valued $160,000. So we have calculated the asset ROI and the real estate ROI. It is, though real estate investments has improved by $10,000, many would assert that the stock investment has beaten the real estate investment because every dollar invested in the stock is greater than that deposited in the property. Assets and risk. Asset return and risk commonly have a positive association. If an investment carries high danger, it should be accompanied by higher returns. When making investment choices, investors must indicate their risk desire. Some individuals may be willing to risk the loss of principal as a substitute for the chance of more significant profits. Instead, exceptionally risk-opposed shareholders look only at the careful vehicles. People closer to retirement commonly choose safe investments. Because they are retiring, they will not make money, so they have to choose a safe investments. I hope you like this video. Thank you very much for watching it. Please do not forget to subscribe to my channel. Thank you. Bye for now.